Ladies and gentlemen, Assalamu alaikum. This is Khabar Iqmal, Chief Operating Officer and Company Secretary, JS Investments. We welcome you to the corporate briefing session of JS Investments Limited. Joining us today is CEO of JSIL, Mr. Fazehra Mankani, and Mr. Rahil Rahman, Chief Financial Officer. The session will begin with the recitation of Holy Quran and then a presentation by the CEO and last the Q&A session after that. Okay. So session will begin with the recitation. As I said, recitation of Holy Quran will begin with the recitation and then we'll move on to the presentation. أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم قل أعوذ برب الفلق من شر ما خلق ومن شر غاسق إذا وقب ومن شر النفاثات في العقد ومن شر حاسد إذا حسد صدق الله العظيم. I would request the CEO JSIL to please give a presentation on the performance.
अस्सलाम वालेकुम आप लोग मेरी आवाज़ सुन सकते हैं अस्सलाम वालेकुम and good afternoon. Thank you for joining us today. It's a pleasure to welcome you at the corporate briefing session of JS Investments. Today, I want to use this session to talk about four key aspects of our business. First, we'll take you through what JS Investments is and the business and remind you of the last 30 years of our history. Secondly, we'll explain in detail how 2025 has been for us, what has been our key achievements. Thirdly, we'll be talking about how we are seeing the performance that we have achieved and how we want to talk about that what were the other elements apart from financial performance, which will take the matters of growth going forward. And then we'll talk about how the industry outlook is in the fourth section and how we see ourselves being placed into that. We'll take the question and answer session at the end. However, the people who are here, and thank you very much for all the analysts that have joined us here, we are happy to take the questions in between a few things for those people who are available in the room. So please raise your hand and feel free to ask the questions during the presentation. From the housekeeping perspective, the people who have joined us online, we would appreciate if you can hold your questions till the end. You can type it in the chat box. We'll read it in the end if there are any questions on the online. Or you can also go verbally in asking those questions in the end. So we'll start off with our corporate briefing session for the year 2025. So as I said, we'll be talking about the company overview and our recent performance. So we'll begin off with what is JS Investments. So as you may all know, we are the first private sector asset management company. Long before, in around 1965, NIT, National Investment Trust, was established, but there was no other asset management company in the country. We established ourselves in the early 1990s, and Unit Trust of Pakistan, which is our balance fund, was launched as the first flagship fund, and which is still operating. Why we felt the need? Because if you see, almost all the financial markets in the world had the mutual fund as a key element of encouraging saving of the retail, and that's what our objective was. However, if you see the industry in those days, it was still not a very, I would say, a very popular idea. The two participants kept on trying to encourage savings culture in the country. Ours being an open-end fund, and that too in the balance category, we used this opportunity where the whole growth had been quite stagnant for 5-6 years to create awareness. And that's around 2000 where actually the competitors start picking it up, and it's always good to be the first one in any industry. And then later on, quite a lot other private sector players joined us in this growth phase. And as we stand on here, we have completed our 30 years last year. In the initial days, we had the partnership of Invesco, which is a very significant player in the investment management space in the European market and is still operating. And IFC also had a shareholding. Later on, the shareholdings changed and evolved, We also were listed in around 2006. And we were the first asset management company to be in the listed space. Even as of now, there are 2 or 3 asset management companies in the listed space. At this point in time, we are a fully owned subsidiary of JS Bank, which is so a little different from other bank-based AMCs, if you see, where the banks were formed prior to the asset management company. But our history is even longer than our parent bank in itself. JS Bank is one of the fastest growing banks, and as far as JS Investments is concerned, for the past 5 years, we are one of the fastest growing asset management companies in this space. In terms of our offerings or businesses in which we operate, as I mentioned, we are primarily a mutual fund management company, but we have other licenses in the alternate space. So if you look at most of the asset managers, there are quite many other big players who are not operating in the REIT segment or the private equity, but we have all the offerings under one space, and that's where we believe our next phase of growth is, where we encourage that investors who want to invest in any asset class, they should be able to tap on JS Investments. This is the corporate information, a basic requirement, as Howard Pal, who is sitting on the right side on the table. He is the company secretary, and we have Raheel, the chief financial officer, also with us. Our board is represented by 2 independent directors, Ms. Maria Mithar and Ms. Madiha Kamal Afsar, in addition to representation from our primary shareholders, whose names you could see on the screen. This is our 30 years legacy, which we talked about. We have been setting the asset management standards in this industry and are quite proud of it. Not many people amongst you might know, we were the first ones to, as I mentioned, introduce the balance fund in the country, the first sector asset allocation fund in the country, the asset allocation fund in the industry. The index fund, the first index fund in the industry. At that point in time, it used to be called A30. So the free float concept, which you see nowadays, was also introduced by JS Investments through their first index fund, which was called A30 Index Fund. Later on, KSE 30 developed its own methodology and introduced the element of free float. So that concept was introduced in Pakistan. We were also the first ones to launch a capital protected fund under the old scheme of things, and not the capital preservation structure, but the capital protected fund. This was, for the first time, an asset management company collaborated with a foreign bank, Standard Chartered, in introducing this product in the country. We continued, and since 2020, we are again back to focusing a lot on innovation. In 2021, we introduced JS Momentum Factor ETF, which is the only smart beta ETF even as of now. And it had outperformed in its 3-4 years of ever since its launch. So that's based on a quant strategy, and also we can it incorporates the factor element, which is quite new and not akin to this part of the world, but we try to do things a little bit differently and introduce such funds which can add value for our investor base. Ever since last year, we are very much focusing on building the foundations for the REIT segment of our business. We had introduced in 2022 JS Rental REIT, which is a commercial office, which is a REIT mainly renting out a commercial office spaces and trying to focus on the yield aspect and improve the yield which people traditionally get from the real estate properties. We are also got approval this year for Hotel REIT, which is in the construction phase, and we are raising funds for it at this point in time. So if you look at our history, apart from all the good things that I mentioned, in the very recent space, we didn't do really well, I would say it plainly, during the years 2011 to 20 time period, where assets under management, which is the backbone for any asset management company's growth, they became quite stalled. And the growth factor was missing in there, where most of the industry was growing, and by 2020 it had gone up to the 1 trillion mark. 20s, the year 20s has been good for the mutual fund industry, but we try to capitalize more and improve our market share in this industry as well. Between 2021 to 2025, the industry has done really well. But what we did was focused on 2021 to 2023, where our company was in the past few years, we were incurring losses. So we used this time period to focus and improve our profitability component. 2024 and 2025 has been the year which could be marked as turnaround phase. And now where we are moving is the next phase of 2026 to 2028, which I would perhaps shed more detail going forward. This would be in the next 3 years. We want to focus on disciplined scale up and through our pension business, which is also growing, the ETF business, as I mentioned, and through multi-platform distribution. So these have been the key highlights across all metrics in 2025. One of the most significant qualitative aspect of the business is the asset management company's rating. So asset management companies, when they work in the corporate world and to some extent in the retail space as well, asset management industry's rating matters a lot. We had, as I mentioned, we had been in the process of growth or improvement across all the scales or aspects of the operation. So whilst our company was rated AM2 in 2020, we continuously upgraded ourselves and added some pluses. And eventually in 2025, we were rated AM1, which is the highest management quality rating of any asset management company. So we considered this a big achievement. And this has already opened, and we are foreseeing that it would open a lot of doors for us, especially in the corporate segment, where the corporates who invest their surplus in mutual funds, they would only want to work with top-tier asset management companies. Another important thing from the retail segment is where we are undertaking those business partnerships or expanding our distribution model. This also plays a very important role. And whilst investors are in our part of the world turn to more sophistication, they would also place some emphasis on the asset management company's rating. So we are now there, and hopefully this would add growth to our business. As of 2025, our assets under management were 164 billion, including all our different, like the mutual funds plus REITs and separately managed accounts. It was a phenomenal year in terms of the new accounts added. So there were 21,386 accounts. You might have heard that the presence of accounts or the number of accounts in our country is, whether it be the stock exchanges or the mutual fund, is very less. As of date, we have around 150K accounts in our, which is roughly, you would say, from the account number perspective, mutual funds are somewhere around 1.1 million accounts. This growth has been where traditionally it was 300, 400,000 accounts only, and that's what we have recently seen. This 164 billion is roughly around 35% growth in our AUMs. As far as profitability is concerned, we reported a profit before tax of 717 million, which is significantly higher as compared to the 500 million, which I'll talk more about the exact numbers in the later slides. So it's significantly higher in terms of profitability as well. And as you could see, the management fee has also gone up. It's also crossed 1.5 billion, and to be exact, it was 1.664 billion in terms of the top line. So in terms of the lifetime accounts breakup, as I mentioned, at this point in time, we are 150, but on the 2025 year end, we had 143 account, 3,238 account. As you know, the digitalization of the financial sector is a very important consideration in our country, not only from the regulators or our economic managers, but also the private sector is focusing on this segment because that's where the future lies in. We are utilizing the parent bank's distribution, the digital distribution channel, which is called Zindagi, which has added around 80,000 or to be more specific, 77,000 accounts over the past 3 years into our account space. JSIL, through its own platform, if you go into our website, we have the sign-ups there, and that has added another 10,000 accounts. One of the segments which has traditionally been a very core revenue driver for us has been the corporate accounts, as I mentioned. We have a very focused strategy on still being able to serve the corporates who invest in mutual fund. And in the past, they used to, they were very focused on mutual funds because it was a tax efficient vehicle. But even at this point in time, if you look at the growth, which I believe, or JSIL is focusing on as a strategy, is to focus on the small and medium enterprises where the finance departments are not sophisticated to invest in T-bills or PIBs themselves. So they utilize our capabilities to invest in this segment. We have then the provincial VPS segment. So this is, if you ask any asset manager at this point in time in the industry, they would mention you the most promising growth segment is the provincial VPS segment, which has been opened only in the past 2 years. To just a little bit explain, and we can talk about it further as we move on in the presentation, is government has decided that all the government employees be there in any province. So whether it be so KP was a pioneer in doing this because of the IMF recommendations and other economic reform reports. They focused on that Pakistan would not be able to furnish off these liabilities, which were of the employees who were in the defined benefit program. So all the new employees, so depending on where this legislation was passed by the provinces in each year, they moved to defined contribution, so which we call the provident fund schemes, where the employer and employee contribute an equal amount from their salaries into the retirement program, and the benefits are then dependent on the performance of that pool of money, rather than the defined benefit schemes, which were a thing of the past, and those liabilities could not be managed anymore by the provincial governments, and which could burden our economic numbers. So ever since that area is opened, this is an opportunity which all the asset management industry is trying to capitalize. We are also working very aggressively on this, and I'm happy to report that we have to not only capitalize on this opportunity, but in 2025 we were the asset managers who got the highest enrollment from the KP provincial program. So if you look at the numbers in terms of the employees of provincial government in KP who enrolled in this program, we managed to capture maximum of those, and to date we have 8,000 accounts already from it. So you can imagine the backlog is somewhere around. So every year around 20,000 employees from each province on an average, and I'm speaking from a very conservative number sake, that those are coming into in this industry, and the money is on a recurring basis credited to the employees' accounts that we are managing. At this point in time, it's only in the money market funds, but as we move forward, the government is likely to relax those requirements, where this money would be invested in other asset classes, schemes of funds as well. Pretty much what we talked about is, so our growth at this point in time may be coming more from the corporate segment, but what we are focused on from the long-term perspective are the pension and long-term savings. As I mentioned, not only the government, but also the private sector employee funds. Then product innovation is the cornerstone of our strategy. We saw significant additional interest in JS Momentum Factor ETF, which crossed the 1 billion in assets under management. And this might sound really low as compared to what traditional mutual funds are, but how we foresee is that just like any other developed market in the world, ETFs might outgrow mutual funds growth moving forward as people become more familiar with the concept. So we want to be the leader in this space, and we are planning to introduce more ETFs in the coming years. One of them is where we've already got our trustees approval, and it's with SCCP on the KSE 100 Index ETF, and we are also working on a commodity ETF. In the alternatives platform, I already mentioned to you some of our recent REIT projects, but I'll talk more about the upcoming REITs that we are working on. In terms of distribution and engagement, we have introduced a wealth center concept and which is, unlike traditional saving centers, we are more focusing on investors who would like to invest on their own and fill the forms, etc., through and do the onboarding process, but they need a helping hand sometimes. So they can walk into those wealth centers. In Karachi, it's in phase 8, and in Lahore also it's in the DHA. and we added another one in Peshawar this year. We plan to increase this at least in the major corporate cities. The key numbers are the profit after tax was 488 million, which is 7.82 per share of earning per share. This is 8% increase on a year-on-year basis, which is in the previous year it was 448 million. And if you look at the EBITDA, the earnings before interest rates, taxes, depreciation, it's 57% up on a year-on-year basis. The reason being that the taxation, so we were enjoying some prior period losses in the past years. That's now been exhausted. So what you see, the growth in the profit after taxes is not in line or consistent with the profit before tax or the EBITDA numbers. Another key aspect of our financials is the income from investments, which is also up from 5% on a year-on-year basis, despite declining interest rate environment, where as in the past year, it was much higher. Interest rates were in the tune of around, on an average, 17%. But in 2025, we had an around 13 to 13.5% in average interest rates, where the balance sheet or capital is invested. But we do invest in our own equity funds, which, and because of the performance of our own funds, plus also the performance of KSE 100, we were able to achieve pretty much similar investment income, which we did last year. So in terms of P&L, I would just take a little pause in here. Wouldn't go too much into details. We can discuss this in the Q&A. But these are the key numbers, where the total income rose to 1.66 billion from 1 billion in 2024. I've already talked about the other aspects. Our admin and selling expense, what you see year-on-year increase, is attributable to one of the changes that SECP introduced in our in the composition, you would say, the way we charge our fees on mutual funds. So up to 2024 and some part of 2025, we were allowed to apportion a part of our expenses to funds, which the expenses which are directly attributable to funds. So let's say if you were charging 1.5% or 2% of a mutual fund to in a certain fund, some of that portion, 50 basis points or 60 basis points, would directly charge to our expense segment and directly charge to the fund. And we, another 1.5% or 1.4% would become part of our income or revenue. Now that entire 2%, which was also scaled down, so if you were charging 2%, somewhere it's become 1.5%, and depending on the category of the mutual fund, we would only be able to charge that percentage directly as management fee. We cannot apportion it to the expense side. Hence, what you see year-on-year increase in the admin and selling expense, it's the half-year impact of that coming in. So as we move forward, you would see more growth in revenues, but also the expense side would appear to be heavy as compared to the 2019 to 2024, which we called the expense ratio regime, as compared to the management fee regime, which has been introduced by SECP in 2025. So that was one of the critical sides of our business, where you would see the change in numbers. I will not spend, again, too much separate time on the balance sheet side, but the improvement is very visible. As of December 31st, 2025, shareholders' equity stood at rupees 2.6 billion, which is up from 2.1 billion a year earlier. Accumulated profits have increased to rupees 1.97 billion, and total liabilities declined to rupees 766 million, and current liabilities reduced materially to rupees 570 million. What it tells us is the company is not only growing larger and more profitable, it's also financially stronger. And why it matters is because it gives us greater flexibility to support new product development, because sometimes we introduce a product and which is not the awareness level is not very high, so we try to introduce it through utilizing our own capital base. It improves resilience of the product, and the unit holders who are trying to test this product, they come with greater confidence. It helps establish a track record of those funds also. So it's not only a year of financial improvement, but as a year in which our institutional standing also advanced meaningfully. So I'll briefly skip these slides I've already talked about. This is basically a requirement as well of our corporate briefing session perspective. So it's a near profitability analysis, but I already talked to you about that. And if you could see this very clearly, that between before 2022, we weren't really doing so well as far as our profitability was concerned. And especially in terms of core revenue, which is now significantly improved. If you could see, our top line was somewhere around 200 million in that era, but now it's gone up to over $1 billion. So the company is on the path of progress. Next, we move on to the third chapter, and I'll be quick about it. Because I've talked a lot about it. So these are just to show the wealth management centers that I was talking about. So they are very focused on the digital side. If you walk in, you would be able to open your account if you don't want any interference from any relationship manager, or you could do that. And if you can't understand a single thing, there would be somebody who could walk you through that. You could open your account sitting there on an iPad in one of the Spark rooms available in our wealth centers, and start your investment or saving journey, whatever you want to call it. So these branches in the typical financial sector world, sometimes they are, what we do is we focus too much on the branch profitability, but for us, we consider this as the more awareness of the brand in itself. In terms of the REIT portfolio, I already talked about the hotel REIT. Going forward, we are planning to, there are two more trust deeds that have been approved, and we are in the process of launching these two. One is the JS REIT, which is a warehouse REIT, and then the other is the JS Bank Hybrid REIT. It's a combination portfolio of residential and commercial projects, and where we are again focusing on maximizing the yield for the end unit holder. In terms of the digital service ecosystem, we have the whole portfolio of customer onboarding for each and every of our product. The Sahulat and regular digital accounts are very convenient to open for mutual funds perspective. But we have also the Sahel account via the Zindagi app, as well as on our own website. You can also open an account through the JSIL WhatsApp bot. This year, where we are going is focusing on introducing separately managed account through one single channel. So digitally, usually the SMA or the separately managed account opening process was very cumbersome. This year we are, and it will be introduced this month only, where an investor would be able to open their bank, brokerage, and mutual fund account in one single go. So, and through that, they could have a discretionary or a non-discretionary selection. And this would ease out quite a lot of, I would say, administrative or operational difficulties that usually our investor faces. So we believe that would be a high potential of growth in the coming year. So these are some of our marketing initiatives. I just wanted to prove that we are working a lot on creating awareness for mutual funds. We believe in the product in itself, and we do these webinars every month, just like the brokerage industry has worked quite studiously over the number of years and through their research reports in raising awareness of our masses for the stock side. We in the asset management space are also in this process, but we're trying to make it more do it in a much more simplified manner, because usually our customer base is somebody who has, I would say, little to no awareness of the financial products where they could put their money in. So it's a combination of newsletters, webinars, fund manager reports. We are also doing it on a very basic level. You would see our whole school awareness campaign where we are doing it even on the very young population level. Then we have our campus ambassador programs where we target colleges and universities. And then we have the rural awareness program, which is the JSIL program. And more details are available about that on our website, but it's targeted towards women savers in the remote segments of the country. In terms of future outlook, we all know we are, at this point in time, we are operating in a very highly volatile environment, the geopolitical tensions and rising oil prices. And in fact, if you even take this heightened volatility for the last 2 months, if we even focus on the past 3-4 years, from the internal perspective, it has been volatile because we have seen how the current account deficits and our ability to navigate around it for all investment managers has been. So we believe those would continue to exist. But what we want to focus is, because this industry is so underpenetrated, so every segment of society would be able to benefit from mutual funds, and that's where we are focusing our next phase of growth is. 2025's performance in terms of financial profitability and other aspects of the business has been very strong. So we enter it with greater confidence to take advantage of long-term savings, alternate asset opportunity, pensions, and the digital distribution side of things. As I mentioned before, we are aiming to to develop our leadership. We are somewhere around the middle asset managers as far as the mutual fund industry is concerned. However, the pension fund segment, typically in the government side, and the ETF, we are one of the top 3s. So that's all from my presentation. I'm happy to take any questions from the audience here or the ones who have joined online. So maybe whilst you are framing your questions, I'll just check quickly if there are any online questions. Not yet? Okay. So we come back to our audience here. If there are any questions, happy to answer this.
We have seen that the company is moving towards more non-traditional investments, as you said, the REIT schemes as well. So why is this? Because they're more complicated, they're harder to execute as well. So what's the reason that we're moving more towards from the traditional to the more conventional sides of schemes?
Sure, thanks. Yes, to an extent, it looks we are focusing, but we're taking our traditional segment of the business, which is mutual fund, side by side with developing the alternate assets segment as well. The reason why we are doing it and why we want to add the REITs into our portfolio is because real estate as an asset class is much more well known amongst our masses as compared to equities or even in the credit bond side. So it's easier to explain that side. But as the industry has evolved, the real estate segment lacks transparency, liquidity, and it has its traditional drawbacks. What REITs provide is it solves all these problems. It adds to the liquidity element. So we can it adds to the liquidity of an investor. There is more transparency because everything is going, the valuation or the whole investment. It's not in unknown properties, just like we do when we see quite a lot of our masses investing in real estate, where they don't have the confidence that whether those real estates exist or not. So it solves the problem of transparency as well. So we see a lot of potential in this segment's growth through the REIT sector, through REITs. And as I mentioned, from even looking at it more holistically, what we aim is that we should not be able to provide investors with only the asset classes that are traditionally available, but anything that they can think about, we would add that into our you would say the product portfolio or the boutique of products that we have, so that they know that when they think about investments, they should think about JS Investments because every product would be available there. Thanks. Any other question? जी आप पीछे माइक भेज देंगे.
Assalamu alaikum. Nasheed Malik here from Growth Securities. My question is particularly related to ETFs. Can you please explain the business model or revenue model behind an ETF? And is the revenue model similar to traditional mutual fund products, or is it something different?
Walaikum Assalam, Rashid. Thank you so much for this. जो KSE 100 का return है, rather than chasing any alpha story. तो जो उस premise या उस basis के ऊपर जो fee structure है, वो भी SECP का बहुत low side पर है. Even allowable fees is less than 1%. और जो I think right 75 basis points, जी 75 basis points is the upper cap. At this point in time, चूंकि इंडस्ट्री बहुत आई वुड से इवॉल्व बहुत नहीं हुई है, मार्केट मेकर्स ने उसको उस तरह से प्रमोट नहीं किया, या उसको ग्रोथ हमारे वहाँ क्योंकि मास सेगमेंट में अवेयरनेस लेवल नहीं है कि ETF एग्जैक्टली है क्या, उसकी एक्सपेंस साइड अभी भी थोड़ी सी हैवी है. सो अगर मैं उसको वैसे देखूँ कि जहाँ पर ट्रस्टी या बाकी सारे एक्सपेंसेस हैं वो थोड़े से हैवी हो जाते हैं. सो वो एग्जैक्टली जो अगर आप इंटरनेशनल मार्केट से उसको कंपेयर करें तो इंटरनेशनल मार्केट्स पूरे सारे एक्सपेंसेस के साथ वो 1% के ऊपर कैप हो जाएगा. यहाँ पर अभी भी वो उससे थोड़ा सा एडेड एलिमेंट हो जाता है. बट वी एज एसेट मैनेजर्स, अगर आप JSMF ETF देखें तो हम लोगों ने it is not a profitable business for us at this point in time. We are actually investing in it, and it's to a certain extent we have lost money despite the fact that our ETF is increased. But what we believe is that in the longer run, when people would be more interested in either passive products or more disciplined active ETFs के जो जिस segment में हम लोग हैं कि it's an active ETF, it's a smart beta ETF, but it's a more disciplined process where people can see actually very transparently what we are doing and where we are investing, and आपको पहले से 1 महीने पहले से पता होता है कि आपकी बास्केट होगी क्या. So that's where ये हमारा फर्स्ट फंड है. तो उसमें जहाँ पर वॉल्यूम आएगा तो we may not be able to, we will still not be making more than 25 or 35 basis points, but we believe that from the company's balance sheet perspective, it's the revenue model of where the world is going. So we want to be there in that space. और जो चीज़ naturally unit holders या investors के benefit में है, तो as a fiduciary we want to focus on that side. जी please.
हेलो, दिस इज़ दीपा जयसवानी फ्रॉम मुनीर खनानी सिक्योरिटीज़. अच्छा, मेरा ये ETF से ही क्वेश्चन है कि अगर हम इन्वेस्टर पर्सपेक्टिव से देखें तो मेनली तो जो मेजर डिफरेंस है, इट वुड क्रिएट अ टैक्स एफिशिएंसी ना.
जी.
अगर तो ये मुझे थोड़ा सा इसका मॉडल समझा सकती हैं कि किस तरह से. और दूसरा ये है कि हम मतलब इसमें ETF में इन्वेस्ट करने से पहले ऐसा कोई रेस्ट्रिक्शन होती है, या फिर हम बोथ साइड पे पैसिव यानी कि ओपन एंड में भी कर सकते हैं और क्लोज एंड फंड्स में भी कर सकते हैं? थोड़ा अगर इसको एक्सप्लेन करें.
Thank you for your question. मैं थोड़ा सा उसको just I need some clarity on your question. So एक आपका जो पार्ट था क्वेश्चन का वो ये था कि ETF की क्या उसका मेन बेनिफिट टैक्स एफिशिएंसी है. सो ETF में टैक्स एफिशिएंसी एज सच नहीं है. जैसे आपसे पहले जो मैं जवाब दे रही थी वो यही था कि उसमें एक्सपेंस साइड जो मैनेजमेंट फी एक्सपेंस साइड है वो कम होती है, और आपको इन अ वे जब आप वो जिस इंडेक्स में इन्वेस्ट कर रहे होते हैं तो आपको श्योरिटी होती है कि एटलीस्ट आपका रिटर्न उस इंडेक्स के जितना होगा. तो वेदर इट बी अ स्मॉल बास्केट ऑफ मोस्ट लिक्विड स्टॉक्स या KSE 100 या जो भी, तो आपका रिटर्न जो है वो आपको पहले से, जब आप ओपन एंड म्यूचुअल फंड्स में इन्वेस्ट करते हैं तो वहाँ पर एक सब्जेक्टिव एलिमेंट आता है, और वो ये है कि आपका स्किल सेट क्या है आपके फंड मैनेजर का. सो दैट ड्राइव्स द रिटर्न्स. So it could be higher, and in some cases it could be lower. Although all mutual fund managers, the fund managers, and they try to outperform market, but academically आपको पता चलता है कि जो जितनी रिसर्च हुई है उसमें this is not possible on a very long term basis. So ये उस एलिमेंट को एड्रेस करता है. टैक्स एफिशिएंसी का इतना एलिमेंट नहीं है ETF में. जो आपका सेकंड क्वेश्चन पार्ट ऑफ द क्वेश्चन था, अगर आप मुझे उसको थोड़ा सा एलॉबरेट कर दें, बिकॉज आई एम लिटिल अनक्लियर.
नहीं, आई थिंक एक्सप्लेन कर दिया अभी.
थैंक यू. एनी अदर क्वेश्चन?
Assalamualaikum. As we have mentioned, what is the major risk in 2026 which impact our earnings? As we mentioned in the slides, inflation's number, oil impact, and geopolitical tension.
If you're asking about going forward, what could be the elements that could impact? There are two critical drivers of our revenue. One is the management fee income, which we charge to our mutual funds and other classes of schemes or funds. The other aspect is our investment income. So our investment income, is the money which we invest in our own mutual funds as allowed by the SECP. We don't run a proprietary book as such, but we invest in our own mutual funds for the purpose of, as I said, sometimes it's done to propel the growth of that mutual fund, or sometimes it's the most beneficial or optimal investment. So that side of our revenue could be impacted by the heightened volatility. On the expense side, increased inflation would impact our expense side of the business. As far as our management fee earnings are concerned, I do foresee some impact on liquidity, but that too, if we see heightened oil prices in the very long term, so which could potentially reduce the growth in our assets under management, or either limit the ability, or we end up losing some assets under management, which I see a lower possibility because of the low basis of assets under management we are in, and the industry is very low penetrated. So this aspect, I would say there is lower risk on this segment of the revenue. There could be some medium risk on the expense side, that inflation could increase our expenses, and there are higher risk of not being able to generate the same level of income which we did last year, because the financial markets would be more volatile. So we may not be able to earn the similar level of investment income which we did. Thank you for this question. Any other question? Anything online? Thank you so much. Thank you so much all for coming in, and I hope we were able to answer most of your questions and provide you some update on our company. The refreshments are served outside, so please do take a few moments to take that. Thank you so much.